All right, welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in. All right, let's take a look before we get to the noon hour Central Time and see where these markets are standing. That's your money. Let's bring up that corn board first. We'll bring that up, and we'll see that it's actually leaking a little lower again, 3.5 cents lower. 4.20 3/4 is last. We're 1/2 cent off the low there in corn. That's March. We go out to the new crop D. That's off 4 3/4 cents to 4.59.5. And again, that's a tick off the low of the day in the new crop. Let's go over to the beans. They're leaking lower here, 9 cents lower in the March. 11.61.5 is last. We're about 1.25 pennies off the low there. If you go out to say even September, that's down 13 3/4 cents to 11.47. We lost that 12 handle in July. That's no longer around either. Let's see what the new crop looks like. Let's take a look at Nove. Novi beans were down obviously the last time we checked, and they've actually added to the loss here a little bit. We're down 15 1/4 cents. That's almost 1.32%. 11.39 3/4 is the price. That's going to be the beans. That's new crop. Let's go to the wheat in Chicago, and we've got a 17 1/4 cent sell off there. This is bad, man. March down to 5.68 1/4, 1/2 cent off the low of the day there. You go out the deferreds, we don't lose as much, but we're still double-digit losses. We're 11 3/4 cents lower in the D's to 5.95.5. We've lost that 6 handle there. So no 6 handles in the front 5 when it comes to Chicago wheat. Let's go take a look at what the hard red wheat in Kansas City looks like. We've got no 6s there either. 11.5 cents lower in the March up front. 5.76 1/4 last. 2 1/4 cents off the low of the day. As you go out the deferreds, you actually gain a little bit in losses. D's is down 13 cents to 5.91.5. So that's the hard red in Kansas City. Let's go to the spring wheat in Minneapolis. Yikes. Okay, 4 3/4 cents lower there, and that March contract is 6.57 3/4. That's 3 3/4 cents off the low of the day. You go all the way out to D's, it's down 6 3/4 cents to 6.82, and folks, that is a new low. SEP is on a new low as well to 6.68 3/4. So it's just ugly all the way around. Let's take a look at cotton. We'll get to our next guest analyst. Cotton is 106 points higher than 94.54, and we're in the middle of the range. We've had about a 200-point range over there, but again, 94.54 up 106 points for the day. Let's bring in our next guest analyst, a friend of the show and the Cow Guy Close. It's going to be Tommy Grisafi. He's at Advanced Trading up in Valparaiso, Indiana, and he's got his nice Valentine's red shirt on a day late. Anyway, what's going on,
I did.
brother?
I wore it for you. Literally, yeah. I ran upstairs. I told Gina I'm going on with Scott, and I have a little man crush on him. I got to put a red shirt on. So, hey, speaking of red, how about these markets? And I've been telling you, you could say a lot of things about me, but I've been very consistent that when people say the funds are short 300,000, the farmer's long over 1 million contracts. So the farmer's long 1 million, the funds are short 300. We're going to see who wins. Today it's the funds, but the farmer still has that long. And here's the worst part. I'm doing a meeting today virtually for a bank group, and the farmer's paying 3 times more interest than they have the last 15 years. And if they watch Cow Guy Close, they've seen the inflation article, the interest rate article. You've done a great job of covering this, and people notice that. They notice it from the comments. But I'm going to say something, and maybe I'll make a YouTube short out of this or something. The risk to the American farmer is still the downside. And although we've dropped very hard, it is February 15th, we're pretty much establishing crop insurance levels. They are at levels that when you take buying 75, 80, 85% of this level, you're looking at losses. So the most overused word in all agriculture this year is profit. And all the softwares are called profit. The companies are called profit. The podcasts called profit. They should all call themselves BS, because that's what's happening here. We're looking at serious losses for people. And here's the worst part, but wait, there's more. There are people who are going to lose money farming in 23, but they're not realizing that loss till 24. So there are a ton of people who have sold 550 corn who are now selling 380 cash corn. And they say it's not over till the fat lady sings. And I think she's singing today, Scotty boy. I hand it back to you.
Well, I mean, obviously, there's not a lot of good news out there. It's been tough as we talk to all these Market Day Report analysts that we have on this show all day, every day. Are we going to have to wait, Tommy, till like the March 30th report or the end of March report to get anything going? I mean, if you're a consumer and you need to buy grain, are you just going to say, come to me, I'm not going to go to you?
It's interesting because I had a large Illinois hog farmer call, and he said, I'm thinking about buying a bunch of corn and buying a bunch of meal, not because he thinks we're going to have a drought, but it's affordable, and he knows he has to finish this many hogs. From the end user standpoint, they should be buying as much upside as they can. If you're a seed company in America and you're planning on selling 3, 4, 5 million bags of corn seed, You want to buy this dip, but most of the people are caught long it. To your point about the March 31st report, that's not going to do anything except for, like, maybe you'll see cotton's been on a run, right? So you quote cotton all the time. Cotton's been on a heck of a run. You may see that some acres go into cotton. But if you want me to be optimistic, the American farmer should be so lucky that there's still a bid in grains. I have seen markets trade where they go no bid, like a sunflower seed up in North Dakota. Even though you don't like the price, everyone in the country is agreeing, yep, 380, 390, 410, we'll give you that for cash corn. We still have a bid. And anyone who's traded markets, as long as you and I, combined age of like 120, you and I, is that I've seen markets go no bid. And so if you're a farmer and there's still a bid, you still have choices. Back to you.
All right, brother, that's great stuff. We're going to leave it there. So don't move. We're going to go away. We're going to pay some bills. We're going to come back and talk more. But Tommy Grisafi, he's with Advanced Trading after this. All right, welcome back. Let's talk about the livestock, right? You can't wear this jacket all day long and not bring up cattle. Let's bring up live cattle. I've got that board picked up. It's not bad. I mean, we've got a little bit of wind beneath our wings here. April's up $1.32 to 185.32, and we've got a 90-cent gain in the August to 180.75. All right, that's 10 cents off the high. Let's move right along. See what we've got going on in feeders. Get to our guest analysts. The feeders are trying to post a gain on the day. We're up 67 cents in the front month, March. 246.90s last, but if you go all the way out to the deferreds, we post a couple of losses. We're off a dime when we get out to September. 268.27. Then finally, lean hogs. What does that have in store for us? Well, it's still on the upside, making a move. 55 cents higher. That's double nickels on the floor. That's what we used to call that. 85.07 is last, and that's 70 cents off the high of the day. And we've got a $1.07 bid in June. 107 higher in June to 97.85. Let's bring back in Mr. Tommy Grisafi. He's in Valparaiso, Indiana. He's with Advanced Trading, great friend of the show. Tommy, anything light your fire when we talk about livestock?
As cattle were making a high, the whole grain complex rolled over. Cattle, when you started earlier today, were much lower, but they've had a heck of a turnaround. Margins from, if you would have sat all the hog farmers down at the beginning of the year and say, how's 2024 look, they would have said, we're in trouble. And they come in trouble, out of trouble throughout the year sometimes. But boy, has the hog market ever come back. And when you look how affordable meal and corn is, it's if you're a hog producer, I would suggest you go buy upside in grains. Not for what we know, but for what we don't know. They never email you before the market explodes higher, Scotty. Back to you.
Yeah, are you getting comfortable with owning some of those? I mean, what about, say, cattle? I mean, is that that negative sentiment moved away from it, and is there some upside there, or do you think we have to be still careful?
No, it's trading back and forth. So cattle are trading. I mean, anytime you could be down 150, up 150, it's a tradable market. Grains are still going, as Dennis Gartman would say, from the top left to the bottom right. And it's not good. I will say one thing from a personal note, from a guy who owns a seed at the Board of Trade. I can buy corn a heck of a lot cheaper than any American farmer can produce it, and it'll never spoil in my futures and options account. Back to you, my friend.
No, that's very true. I mean, it's a lot to be said for that. And we've got a very interesting year coming up. Plus, with the outside markets worrying about interest rates and inflation, it's only going to get more busy from here on out. So appreciate all that stuff, content. Great comments. Tommy Grisafi, he's with Advanced Trading, and he's in Valparaiso, Indiana.